Hey there, Mad Money viewers. Today we're diving into the world of gold, but this isn't about your grandma's jewelry. This is about serious business. We're talking about how gold is becoming a powerhouse in the banking industry. You see, banks are always looking for the best assets. They want assets that are safe, stable, and can hold their value. And guess what? Gold fits the bill perfectly. Now, gold has always been valuable, but recently it's been getting even more attention from banks. They're realizing that gold isn't just a shiny metal, it's a strategic asset. So buckle up, because we're about to uncover why gold is the new darling of the banking world. Before we go any further, let's talk about Tier 1 assets. In the world of finance, Tier 1 assets are the creme de la creme. They're the safest and most liquid assets a bank can have. Think of them as the foundation of a bank's financial strength. What makes an asset Tier 1? Well, it needs to meet some strict criteria. It has to be highly liquid, meaning it can be easily converted to cash. It also needs to be low risk, meaning there's a little chance of losing money on it. And that's where gold comes in. Gold has proven itself time and time again as a reliable store of value. It's held its value for centuries through thick and thin. That's why banks are now classifying gold as a Tier 1 asset. Gold has been a symbol of wealth and power for as long as we can remember. For centuries, it was the foundation of monetary systems worldwide. Kings and emperors used gold coins as currency. But even after we moved away from the gold standard, gold never lost its allure. It's always been seen as a safe haven asset. When times get tough, people turn to gold. They know it will hold its value when other assets are tanking. And now banks are catching on to this. They're realizing that having gold in their reserves makes them more resilient. It's like having a financial safety net. Now let's talk about Basel III. These are international banking regulations designed to make the global financial system safer. And guess what? Basel III has been a game changer for gold. You see, Basel III recognizes gold as a high-quality liquid asset. That means banks can now hold more gold in their reserves without hurting their capital ratios. This has been huge for the gold market. Banks are now more eager than ever to add gold to their balance sheets, and that demand is pushing up the price of gold. Section 5. Golden Impact: How gold is shaking up the banking world. So, how is gold changing the banking landscape? Well, for starters, it's making banks more resilient. By holding gold, banks are better equipped to weather financial storms. But it's not just about safety. Gold is also a good investment. As I said before, the price of gold tends to go up when other assets are struggling. That means gold can help banks diversify their portfolios and boost their returns. And let's not forget about central banks. They're buying up gold at record rates. Why? Because they see gold as a way to diversify their reserves and hedge against currency fluctuations. Section 6. Handling the heavyweight, the logistics of managing gold. Now, managing gold isn't like managing stocks or bonds. It's a physical asset, which means there are logistical challenges. Banks need to store it securely, insure it properly, and transport it safely. This is where specialized custodians come in. These companies have the expertise and infrastructure to handle large quantities of gold. They provide secure storage facilities, transportation services, and insurance coverage. Section 7. The global gold game players, markets and movements. The gold market is truly global. It's a complex web of buyers and sellers, from individual investors to massive institutions. The price of gold is constantly fluctuating, driven by factors like supply and demand, geopolitical events, and economic conditions. It's a dynamic market that requires careful analysis and a deep understanding of the forces at play. Section 8. Golden instruments, trading and investing in the yellow metal. There are many ways to invest in gold. You can buy physical gold like bars or coins. You can invest in gold ETFs, which track the price of gold, or you can trade gold futures contracts. Each investment method has its own risks and rewards. It's important to do your research and choose the option that best suits your investment goals and risk tolerance. Section 9. Weighing the risks, gold's glittering potential and potential pitfalls. Now let's be clear, gold is not a guaranteed moneymaker. Like any investment, it has its risks. The price of gold can be volatile and there's no guarantee that it will always go up. But here's the bottom line. Gold is a unique asset. It's a tangible store of value that's been trusted for centuries. And in today's uncertain world, that's more valuable than ever. So there you have it, folks. Gold is no longer just a relic of the past. It's a key player in the modern financial system. And as banks continue to embrace gold, we can expect its influence to grow even stronger in the years to come. That's all for now. Stay tuned for more Mad Money wisdom.